Okay, good morning or good evening, depending on your time zone, everyone. It's exciting to see all of you. So my name is Andrei Malenko. I'm a finance professor at Michigan Ross. So I do research on corporate finance and mergers and acquisitions. And more recently, I have started working on special purpose acquisition companies, which is the topic of our panel today. So let me give you a kind of a quick overview of what we're going to be talking today for the next it's about 2 hours. So we have 2 exciting panelists today. So Mr. Daniel Wan and Mr. Adil Roof. In a couple of minutes, they will introduce themselves in a few words about their backgrounds and expertise and what they do. We will start with a brief introduction of special purpose acquisition companies. So Mr. Roof will give an introduction of SPACs in the US, particularly in New York. And followed by Mr. Wang giving an introduction of SPACs in Hong Kong. So then we will move on to one of the first 3 parts of the panel. So we'll start with regulation of SPACs in Hong Kong, so which is very interesting and kind of highlights some different aspects compared to New York. So we'll talk about what exactly is going on in terms of the law regime and why exactly Hong Kong decided this specific time to promote SPACs. So then we will do the second part, which will be about the comparison between New York and Hong Kong. So we'll discuss some of the recent developments in New York. So what is different between New York and Hong Kong in terms of development, execution, and functions of SPACs, and also in terms of regulations. And finally, the last part will be about the future of special purpose acquisition companies. So we'll talk about various sources of risks and potential bubbles and concerns. Especially given kind of the recent boom of SPACs in the last year. So we'll talk about also from the point of view of the companies trying to raise capital and choosing whether to do it through a merger with a SPAC or through a traditional IPO or through raising private capital. Kind of what are the factors and the sources of risk to think about. And finally, we will have Q&A. So all the participants will have an opportunity to ask their questions. And in fact, if any of the participants have any questions along the way, as our panelists kind of discuss and give their points, you're very welcome to write them in the Q&A. And I will be trying to ask the panelists and put some of these questions if they fit the topic of the discussions. So without further ado, let me turn the virtual table to Mr. Daniel Wan. So Mr. Wan, if you could give a brief introduction, so then we'll give an opportunity for Mr. Roof to introduce, and then we'll talk about the introduction to SPACs. So please, Mr. Wan.
Hi, can you hear me, everyone?
Yes, wonderful.
Okay, thank you. Thank you for Michigan China Forum to have invited me to join this very interesting and timely sharing among all. And I'm very, it's my pleasure to be able to join this SPAC discussion. As you know, SPAC regime is, I think the first country that has SPAC regime is US. So US is definitely a pioneer in this point. And Hong Kong has been quite late to introduce SPAC here. For example, like in Asia, we knew that, for example, like Singapore, Malaysia, South Korea, all have already a SPAC regime. And Hong Kong just started as introduction and discussion beginning of the last year. But Hong Kong has been quick and they introduced certain rules on it and then implemented the rules from 1st of January this year. So far, I think it's not up to 3 months. We already have 11 SPAC listing applications submitted into Hong Kong Stock Exchange. And so far, we have already got one successfully listed on Hong Kong Stock Exchange. So based on the market feedback, we expect to have at least 30 SPACs to be listed within this year. I think for Hong Kong, we always see US as a pioneer in the capital market. So no different for SPAC. And as an introduction, the rules for Hong Kong SPAC basically mostly actually copy from the US regime. But of course, in certain parts, Hong Kong refined it and then adapt it to based on the local situation. But all along, I think the whole concept, the whole mindset is very akin to the US counterpart. And for myself, we have been doing a SPAC setup and then also the legal work on that since the beginning of this year. And so far, we are working on several SPAC setting up. And obviously, I think a SPAC regime introduced more capital work for not only the intermediaries in Hong Kong, but also the investors in Hong Kong. So I think this is good news in this part of the world as well. Thank you. I leave to the audience to Adil.
So thank you, Mr. Wan. And now, Mr. Adil Roof, please give a brief introduction, and we could then switch to the first topic, which is introduction to SPACs. And I believe there will be some slide sharing for this. So please, Mr. Roof, take it away.
Sure. No, correct. Thank you so much, Andre. Good morning, everyone. It's a wonderful Saturday morning here in New York. So I'm still trying to gain my voice. My name is Adil, and I've been involved in SPACs in 2019. And I initially did 2 SPACs with Cohens. They're pretty well known in this space. One is Betsy Cohen and Daniel Cohen. So I did 2 SPACs with them. And then back in 2020, I launched a SPAC called Altitude Acquisition Corp, which is a $300 million NASDAQ listed SPAC. Although my title is Senior Vice President, but the titles in SPACs don't matter. I play a role of a CFO primarily. Then I also launched a second SPAC called Founders SPAC, which is a $321 million SPAC. And that recently announced a business, a merger with Rubicon Technology. It's a solid waste management online platform. I'm also involved in another SPAC with InvestCorp Acquisition, which is InvestCorp Acquisition Corp. It's backed by a very large asset manager, InvestCorp. And then there's another SPAC I'm involved with called London SPAC, which is going to be focusing in the fintech ecosystem in London. So I've done a handful of SPACs, and the primary purpose of doing those SPACs in those jurisdiction or those industry was because we saw there's a huge opportunity there, and we can bring some high quality companies to public market. Prior to that, I spent about a little over 6 to 7 years in investment banking, primarily on the power and renewable side. And most recently, in banking, I was at JP Morgan in leverage finance team. So I think having spent, like a very, I would still call it my young career in banking, I was able to come into the SPAC side of the things very early on. And I think I've seen this market evolve very rapidly. And, as we've seen new regime in Hong Kong, I was first about to list another SPAC in London. So we moved our SPAC to New York because of some liquidity issues. But, I think each jurisdiction, established capital markets, they are definitely looking at SPACs very closely. And they're, working towards, issuing friendlier regulations. So there are more people interested in that. So With that said, I will turn it over. I will, start sharing the presentation. Although the presentation is pretty long, I can send it to everyone too. It's publicly available, but my goal will be to run through that very quickly.
Thank you, Adil. Wonderful.
Sure. So I think only host can share. Should I just select all panelists? Okay. Can everybody see my screen?
Yes, we can.
Yes.
Sure. Perfect.
I know this looks, it's back from June 2020, but I found this presentation to be very helpful and very straightforward. So I'll start going through it. And if you have any question, please feel free to interrupt me and I'll be happy to clarify that. So first of all, what is a SPAC, right? A SPAC is it's a special purpose acquisition company, which is formed with a specific purpose of acquiring one or more businesses in an unspecified industry, in an unspecified business in any industry. And usually that information is disclosed in an IPO investment prospectus, which we call an S1. The structure of a SPAC is pretty straightforward. You raise capital at $10 a share, and the capital that you raise via a SPAC IPO is then placed into a trust account. And then each investor that buy a unit of a SPAC, typically also that unit comes with a warrant. Although some issuers, just issue a SPAC, like just without warrants, but typically you will see that structure. Now the next question will come to your mind that, like why would somebody want to invest in a SPAC? The interesting thing is the institutional investors and even retail investors, when they invest their money in SPAC, after a certain amount of time, which a SPAC has, typically anywhere from 18 to 24 months, although one of my SPAC is 15 months. So basically you have to find a target during that time. And if you're not able to find the target, the SPAC is liquidated and all your money is returned to the investors, right? So they don't have any risk. Secondly, if even the deal is announced and investors are vol crossed and they can see the deal that you will bring to the market, investors can say no to that. If they don't like the deal, they can redeem their shares and they can still keep the warrant as an upside. So that was a very brief structure in terms of how SPAC will work. This slide gives you a good comparison in terms of like a difference between a SPAC, a VC, and a PE or a hedge fund. I would say I wouldn't call SPAC an investment vehicle just yet because there are still like rulings around that. But typically think about SPAC as a publicly traded vehicle, right? I'm hesitant of calling it an investment vehicle, but conceptually you will get it. The SPAC has, I would say, more liquidity because it's public. Shares are being actively traded. You can sell your shares. Whereas in PE, VC, and hedge fund world, the time horizon is quite long. The funds they can be anywhere from like 7 years to 10 years, or as little as whatever the hedge fund, for how long, whatever the tenor of the hedge fund is. Economics are a little different too. Typically, PE and VC funds, they also have like carry and 20% of the capital. SPACs also have that, right? Because how the sponsor team makes money is that, let's say if a SPAC raises 100 million, 100 million divided by 10 is 10 million shares. Now, like you can imagine, okay, the SPAC sponsors are investing all the money, but how do they get compensated? So the way we get compensated is we have private shares, right? The private shares are equivalent to about 20% of the total cap table. So in other words, there are about in 100 million SPAC, there are about 2.5 million of private shares outstanding. That's about 20% of the total market cap. So those shares are private. Till we announce the deal, they don't come into play. If we don't announce a deal and the SPAC is liquidated, those shares are worthless. The SPAC sponsor does not make any money. But if the deal is announced and the deal goes through, then we get those shares. And typically those shares are negotiated. We can give up amount of some shares to get the deal done, or sometimes we allocate those shares as a in a vesting schedule, where if a stock reaches a certain price threshold, then we unlock those shares and we can sell them. This slide gives you a very brief overview of what is the benefit to sellers and benefit to investors, as I will just read a couple of high-level ones. SPAC tends to be pretty fast as compared to an IPO, because SPAC is already a public company. It's a blank shell company. You just put that private company into that blank shell company and that becomes public, right? Fascinating. It's super fast. IPO can be very long, and it can be very bureaucratic too, frankly. In SPACs too, we are able to provide forward guidance on business prospectuses. We can show the projections. We can talk about it. Although SEC is pretty, they are scrutinizing that too, and there will be some regulations around that, because some SPAC sponsors are showing crazy projections of those companies, and the companies are not achieving those, which gives SPACs a bad name. However, in an IPO, you cannot talk about forward guidance. It's prohibited. It's against the SEC rules. Now I will talk about some of the benefits to the investor. So I think the access to aligned high quality sponsors without management fee. So simple, you're not paying any fee, like in a hedge fund or a PE where you're paying 2% or 1% management fee. In SPACs, you're not. We just have those private shares. And those private shares come into play if we are successful. If we are not, then those shares cannot be, they're forfeited. SPAC's time horizon is smaller too, so it's a benefit to an investor. They can see the deal before we invest in it. They don't like it, they can tap out. They can get their money back. This chart just gives you a very good overview of how typically a SPAC structure will look like, right? So as you can see, there are it's divided into three subsets. Number one is investor. Investors are typically SPAC sponsors, in this case, myself. Then I also have some IPO investors. We also call them, some IPO investors also anchor our SPAC. Anchor meaning they buy 10% or more of my SPAC shares during the IPO. Then we also have PIPE investors. PIPE is basically private investment in public entity, right? So the reason PIPE plays a role is when we announce a deal, there is a cash sitting in a trust account. Then it's encouraged to raise additional capital at $10 a share to validate the enterprise value. And typically that PIPE is, the investors that come into that PIPE are typically institutional investors or the hedge fund or the existing investors even in the company. So that really validates and say, okay, you have skin in the game, right? You are coming in at the PIPE too, but that basically validates the transaction for the public investors that, hey, we think this enterprise value is great, and that's why, although we have shares on the sponsor side, which are private, we're also bringing in new capital at $10 a share, to basically bring confidence to the market. Second bracket is SPAC itself. So SPAC itself has its own investors. Those are public investors, and they're actively trading your shares, right? So those investors that come into your IPO, they're actively trading it. They can sell their position. They can hold on to it just like any other company. And then, as I talked about earlier, there's an IPO trust account where all your money is sitting in. Third bucket is a target company, of course. So again, we cannot talk about a company during the SPAC IPO process. We can only talk to any target after the IPO is closed. And by the way, if I'm running out of time, please do let me know, but I'm going to just run through those slides. This is just like an illustrative example of a target company equity value of 750 million. So as you can see here, the SPAC sponsor, we are just going to assume that I think in this case, the SPAC size is 50 million. And then we have, actually, SPAC size is 200 million right here. In that 200 million, this table just spits out for you in the scenario of 750 million, how the breakout will look like. This also assume we are raising some, I think, additional capital, but you can go through it. It's pretty straightforward. I think this timeline is extremely important. Typically, pre-IPO stage, when you're planning the SPAC, when we're putting the teams together, I mean, that time is really hard to determine. Sometimes if I have a team, I can, work through in 2 months. In case of London SPAC, I launched that SPAC in September. First, we were planning on listing in London, and then we found there's not much liquidity. Then we moved our SPAC to US, right? But that really took a lot of time. So planning requires a lot of time, by the way. So I think the most important stage here is IPO stage. So as you can see in IPO stage, it can be anywhere from 2 to 3 months, which has officers and executive officers listed. One of them can be me too. And then you have S1 filing. You do the confidential filing, you hear from SEC, you take care of the comments, and you do the public filing, so on and so forth. Then the transaction stage is the most interesting stage, because in this stage, as you know, the SPAC is already priced. The money is sitting in the trust account. Now a SPAC has about 12 to 36 months. If a SPAC, SPAC also has a liquidation deadline too. So SPAC has to find a target within the defined timeline and close the deal. So that process can take anywhere from 12 to 36 months. And if it's like an international company, that may have, SEC may have a lot of comments, because, there's a lot of disclosure rules that you need to follow. And this slides just go into a SPAC IPO process in more detail. So I'm not going to bore you out with that, but you can feel free to read through it. It's just basically a more, more longer version of what we were just talking about 2 minutes ago. And this is again, I think not the same slide, sorry. So this one just I will just quickly run through that. What is the SPAC post-IPO process, right? When the SPAC is public, you're still looking for a target. Essentially, a SPAC is a public company. So that includes, like in my role, CFO, that's where I play a key role, because I have to take care of like 10Q filing, 10K filing, just like any other company. Although our filings are not that complicated, they're straightforward, but I still have to work with my accountants and auditors to issue, the financials in guidance with, whatever SEC rulings require us to do. And during the transaction process, you're working with your underwriters, because in this case, you're incorporating all the details of the target company into your filing, because you're saying that you will be merging with that company. So there's a lot of work that goes into this process. This process can take, these days, about 6 months. So we announced a deal in December, and we're closing it about in May or early June. But that tells you the process takes about 6 months to close the deal in today's market from the point when you announce the deal. This one just talks about best practices in SPAC. There are no certain rules. These are just like, this SPAC, if this structure can make it more successful. I think the most focused area should here be like 2 to 3 times of SPAC IPO, and I'll explain you very quickly. What this line telling you is that if a SPAC size is 100 million, then what it's saying is that when you find a company, the company should be 2 to 3 times the size of the SPAC. So in this case, if we take 3 times, 100 times 3 is 300 million. So what they're saying is the SPAC value should be at least the enterprise value of the target company should at least be 300 million. Why? Because you want to find a target company that can sustain that dilution, right? Because the SPAC has its own shares. Then you have SPAC sponsor shares. Those are private, that will come into play once the deal is closed. And then you also have warrants, right? Those warrants are just like another financial instrument where there's a specific strike price. And if the stock price reaches that strike price, you can convert your warrants into the share, meaning there will be more dilution. So you want to make sure the company is a very high quality company, big enough to sustain the dilution. That's why a company size needs to be bigger than SPAC size right here. So I think this was a main takeaway from this slide, but all the points are very helpful here. Those are laid out. These are just some slides on SPAC industry, how they've rapidly grown. And my apologies, these are like, some of them are outdated, but I know the numbers from the back of my head. In 2020, we saw crazy mania. There was like 500 billion raised across SPACs. 2022 has been a little slow. I've seen about like 2 to 3 SPACs get priced every week, but right now it's pretty slow. The market is like definitely probably at its weakest point, because there are so many SPACs in the market, and they're chasing very few high quality companies, right? There are many other companies, those are not high quality. So important thing to understand here is that you need to have high quality SPAC sponsor team that has done it before. They actually have access to capital in form of institutional investors, and they also have capability to close the deals in time. As you've seen from the news, a lot of SPACs that announced the deal, their deals were not being closed, or they walked away, or they canceled the deal. So you need to keep all these things in mind, and you need to have like a very broader picture of the overall market. Again, just talking about some market share. These talk about like number of SPACs by geographic region. As you say, and as the other panelists highlighted, that North America pretty much has the most wallet for the SPACs. And I think this is still true to this day. America still holds anywhere from 80 to 90% of the SPACs, but that shift will change now. As we're going to talk about Hong Kong regulations here, the London regulations here, then we have Amsterdam, and like I heard like Dubai, they're opening to SPAC listings as well. So the world around us is rapidly changing, and we will see this proportion go down over time, where US or North America will represent far less than 82% as reflected in this chart, and all the other regions will probably have more of a wallet of SPACs as the regulations come into play. This SPAC is just about what's the breakdown of the SPAC focus, because when a SPAC is listed, a SPAC highlights its intention of which sector it will focus in, right? You have to tell your investors, like, in which sector will you buy a company in? You can be a generalist, but a generalist, you can talk about all the other industry, but typically I would say a lot of SPACs are focused on, a specific sector, because that's where the expertise of the management team of a SPAC lies. These are, just some, I think these a little meaningless slides. So I think this is one slide I would like to very quickly talk about. So this is where we're talking about like the quartile of SPACs, right? And again, nobody publishes that, but if you're in the SPAC world, So we divide a lot of these SPACs into tier 1, tier 2, tier 3, right? Tier 1 is like very high quality sponsor, tier 2, little less, and tier 3 is probably first time issuers who have no SPAC experience, right? So I think as an investor and as a critic, I think you should definitely focus on who the tier 1 SPAC sponsors are. Tier 1 SPAC sponsors are people who have done the SPACs a lot of time. You look at their track record, how did their companies perform in the market? You have to keep all those things in mind. And that's what differentiates tier 2, tier 3 versus tier 1, because I think in 2021 and even in 2022, a lot of sponsor teams that shouldn't have gone out, they went out. And I think that is where I personally believe that there should be some, underwriters and investment banks should take key notes and not take out teams those are not high quality, because that's just like make the market, like a SPAC market, and give it a bad name. These are some of the, SPAC deals that I believe are very popular and they've done really well. And a lot of these companies are very, very well known, and you may not have ever heard of them. DraftKings is one of them. It has traded really well. Its stock price is not at 36. I think it's at $20 at the moment, but it went all the way to $60, right? It was a good SPAC deal, I would say. Repay, Clarivate, Card Connect was one of the deals, my sponsor team that I was involved in. This company got bought by First Data, like $18 a share. So that's 80% upside, right? Then you have Virgin Galactic, so on and so forth. This is just a list of like some good SPACs that you've seen. I think I would like to end here. These are just the league tables I can quickly run through. These are some of the key banks that play a key role. Although the table has shifted, I would say you will see Goldman Sachs at number 1, Citigroup, Cantor, Moelis. I personally use Cantor, Moelis, JP Morgan, Barclays. These are the banks I've worked with across all my SPACs, because you need to have that diversity. So these are just their underwriter. All the investment banks like to brag about it. And I was in investment banking too. We were bragging about our league tables as well. So yeah, I mean, that's it. Just wanted to quickly run through. I think I'll be open to answer any questions that you may have.
Thank you, Adil, for a beautiful introduction, starting from mechanics of SPACs to industry and role of banks and the target selection process.
I tried. I hope I was not clear.
Thank you. So just a couple of remarks. So first, for the audience, if anyone has questions, please, you are very welcome to write them in the Q&A box. And those will either be answered in the Q&A box, or I will ask them to our panelists. With this, let me now turn the table to Daniel. So please, Daniel, take it away, and Daniel will tell us about SPACs in Hong Kong.
Sure, thank you, Andrew. Let me share my screen in order to show my PPT. A moment, yeah. Right. Can you see that?
Yes.
Okay. Thank you. Right. Let me start. Yep. I think thanks, Adil, for bringing a very fruitful introduction to SPAC. As I said, Hong Kong SPAC regime is actually copied as much as we can from the US regime, and we retain most of it. Of course, we adapt a certain part of it and to be suitable for local situations. As Adil said, SPAC actually is a special purpose acquisition company. What it actually means is, in traditional IPO, normally we will help a company, for example, like it has been doing a very successful business, and it has certain, for example, like high quality business, and then it has is very profitable, and we do the due diligence. We help them to apply to Hong Kong Stock Exchange to get it listed. These are the traditional IPO ways. Yeah. But in contrast, SPAC is we help the client. In US, we call it sponsor, but in Hong Kong, we call it promoter. We help these initial investors to set up SPAC, and then we help them to get listed as soon as possible. This is what we call to create a listed share first, and then it has a time frame of 2 to 3 years to find a de-SPAC target. Once it finds it, and it will acquire the target, and in return, this SPAC will give either the new shares or a mixture of new shares and certain money to the controlling shareholders of the target. Once upon the completion of the de-SPAC transaction, then this SPAC company will become ordinary listed company. So this is how SPAC does it. Basically, it is the other way around of a traditional IPO. And the end result is we are having a successor company, which is akin to an ordinary listed company. So let's start by from the very beginning, how this idea come from. First of all, we have initial investors. They probably are the personnel which have the US SPAC experience, or some asset management or even corporate finance experience. Normally, they most of them are from, they know how to do it, and most of them are from investment banks. They like to become the initial investor. They become the promoter or sponsor in US. They will look for the lawyers to set up a SPAC. And then basically, the amount that they are going to invest is about 60 million Hong Kong dollars. That is for giving out to the fees for the lawyers, for the accountants, as well as the underwriters. In return, these initial investors will get promoter shares, and they could also get promoter warrants, even the earn-out rights. All these securities will entitle them to the shares of the successor company after the de-SPAC transaction. And about the same time, they could also provide a loan. So these are all the measures that they put up this maybe $60 million into this SPAC to fund its expenses. So this is what they get: promoter shares, promoter warrants, even the earn-out rights, and then as well as the repayment of the loan. The second category of personnel that involved in SPAC is SPAC investor. These are the investors that subscribe for the shares when the SPAC get listed. In Hong Kong, this is a little bit different from US, as I understand, because in US, I understand that it allows the professional investor as well as retail investors to subscribe for the SPAC shares. But in Hong Kong, because of the risk management, as said by the Hong Kong Stock Exchange, at the moment, Hong Kong Stock Exchange only allow professional investors, which is investors which has certain wealth, which has certain level of the wealth registered with the investment banks to invest in this SPAC. So basically, their mentality is to having the risk management, not allow the retail investors to participate in SPAC. This is, I think, the one key difference. So basically, these professional investors will get the SPAC shares as well as SPAC warrants. In US, we know that they are called units, and each unit will consist of SPAC shares and SPAC warrants. But in Hong Kong, we get rid of the term unit. So basically, we just saying that we are offering SPAC shares and SPAC warrants at the SPAC listing for the professional investors to buy. And then, as Adil put it, for the protection of the investment, these SPAC investors will have the chance to redeem all or any part of their shares within this 2 to 3 years period. For example, like when the SPAC want to do a de-SPAC transaction, which is the acquiring the target, they have the chance to redeem that their investment. And having said that, even though they redeem all their shares, they still got the SPAC warrants. So this is some sweeteners for them. So this is also this is a measure to attract the SPAC investors to participate in this SPAC investment. Okay, now we come to SPAC listing, same as US. But of course, the difference is because the SPAC shares are only for professional investors to buy. You could see that the threshold set by the Hong Kong Stock Exchange is very high. For example, like the bought lot size, whenever the professional investor want to buy, the bought lot size is at least 1 million Hong Kong dollars. So definitely by this amount, this is not open to the retail investors. And you can see that there is a minimum amount for the fund raised in a SPAC listing, which is 1 billion Hong Kong dollars. Right, after SPAC listing, then the SPAC shares as well as SPAC warrant will be separately traded. And those traded could only be the professional investors. So whether the buyer or seller, they are only open to professional investors. So for example, we have Hong Kong has already one SPAC listed successfully. This is called Aquila. They have their SPAC shares and SPAC warrants traded separately with different stock code. As Adil put it, so where the IPO process going to be kept, it will be kept by a trustee or custodian, which means that we will put aside this whole 1 billion Hong Kong dollars into a separate trust account, and the SPAC and as well as the sponsors cannot touch it. Every SPAC has 2 to 3 years time frame to find the SPAC target. If it fails to find it within the time frame, it has to be liquidated and return the money to the professional investors. So what the SPAC target the Hong Kong Stock Exchange expect? At the moment, it allows any target with any business, but except for those investment companies. And then it also set a minimum threshold for SPAC target, which is it must be 80% of the fund raised by the SPAC at its listing. For example, the minimum amount of the fundraise is 1 billion Hong Kong dollars. Then you need to find a target with a fair market value of at least 800 million Hong Kong dollars. But I think in reality, we look at the US examples. I would also expect the target, the value would be maybe 2 or 3 or 4 times of the fundraise, because otherwise you cannot sustain the dilution, and it will not be attractive enough for the shareholders of the target. And then look at the last sentence. I think this is another key difference from US SPAC regime. In Hong Kong, it's more conservative. The Hong Kong capital market is really concerned about the quality of the de-SPAC target. So in Hong Kong SPAC regime, when they do the de-SPAC transaction, that means the acquisition of the de-SPAC target, this target will need to go through the same vetting procedure and the application procedure with the Hong Kong Stock Exchange like any other traditional IPO. You could say that this is it makes it less attractive, makes it less easy to go through this de-SPAC transaction. But then this is the decision of the Hong Kong Stock Exchange in order to maintain certain quality of the de-SPAC target. Similar to US SPAC regime, when you find a de-SPAC target at about the same time, you also need some fresh investment from PIPE investors. Hong Kong is the same. And then the range of the investment, the range of the fresh investment from this PIPE investor is somehow between 200 million to 700 million Hong Kong dollars. After the completion of the de-SPAC transaction, the trading arrangement changed, because before that, it could only be traded among the professional investors. But after you complete a de-SPAC acquisition, then the SPAC will become the successor company, and the SPAC shares, which is held by the professional investors, will become shares of the successor companies. And then since that on, all types of investors, so not just the professional investor, but include any type, including the retail investors, could trade in the successor company shares. And then the securities held by the sponsor, which is called promoter in Hong Kong, which is promoter shares, promoter warrant, and outright, all these will become or converted into successor companies' shares. The deadline is within the 24 months from the date of SPAC listing. The SPAC must publish an announcement that it has already identified the SPAC target, what kind of consideration is going to be given to the SPAC target, and what kind of PIPE investor they have looked for. And then another deadline is a SPAC has 36 months time frame to complete a de-SPAC transaction from the date of its listing. Basically, this is the summary of the Hong Kong SPAC regime. Again, it copied mostly from the US regime, but then it retained certain elements to suit the local needs. Thank you.
Thank you, Daniel. This was very insightful. So we have a number of questions about various institutional details of SPACs, and I will be incorporating them in our discussion as we move along. But one kind of big picture questions I would like to ask to our panelists is the following. So there are two different views of how SPACs kind of add value to the markets that I have seen. So one is that SPACs is an alternative to as a substitute to the traditional book building IPO process, which is very bureaucratic and inefficient and takes a long time. And this financial innovation kind of bypasses it and is more efficient. So the other view is that SPACs is more a substitute for the private capital. So traditional like raising private equity money. And so it's similar type of companies that would have raised private equity capital. They can now raise public equity capital, which is of course kind of a very big pool of money. And I would love to hear your thoughts, Adil and Daniel. Which of this view is kind of more correct in your view, or maybe both are correct? So Adil, any thoughts?
I can take a first stab at it. I think that a few years ago, I would say the first view was actually correct, that companies were utilizing the SPAC route as a true alternative to an IPO, which, to your point, the process is very bureaucratic, can take a long time. And, SPAC basically provided that additional layer to those companies. And the company thought maybe, and in an often case, believe it or not, the companies got, because IPO can be really expensive. So SPAC was actually a cheaper route for them from a cost-effective standpoint. Now, post, I would say 2021, I've seen that a lot of companies actually are utilizing SPAC as an alternative to a private equity and hedge fund route. That causes two issues. Number one, first of all, that has really shifted the market where, institutional investors are now open to, pre-revenue companies, or the companies that are like high growth. They are, they still have some runway to grow, but they can be public companies. So it's about institutional investors, and they have allowed that to happen now. It was not the case in the past on a very occasional basis. But there's one criticism that I personally have with this route is a lot of companies who are going with this route instead of raising capital in private markets. I think a lot of these companies are very immature companies. They're not public ready, and they become public just because they try to be very, it can be their ego problem because they just want to be a public company, right? And I think if you're not, if you're not ready and you become public, your stock will really be scrutinized, and you will see that happen with a lot of SPACs. So hope that answers the question.
Thank you. This is very interesting how this is a very rapidly evolving market. Daniel, any thoughts on further thoughts on this?
Nothing to add at the moment, because Hong Kong at the moment is at the infant stage for SPAC regime. We already got the first SPAC listed just 2 weeks ago. We have seen that for this the very first SPAC listing, it has tried its best to do its book building upon the SPAC listing. So at the moment, because of the poor performance of the Hong Kong stock market, so basically it's not. It's also a little bit. It has also a little bit of a liquidity issue, and a bit difficult for the book building for SPAC listing at the moment.
Thank you. So moving to the SPAC regulation in Hong Kong. I would like to hear your thoughts on like why does Hong Kong choose this specific time to promote SPAC? So is there any special reason for this, or is it just kind of naturally arose due to this kind of booming market last year? So any thoughts, Daniel?
Yeah, I think Hong Kong Stock Exchange has been working quite hard to maintain its attractiveness for the companies in this region, especially from mainland China. For example, before even they introduced SPAC beginning of this year, they have introduced, for example, like they allow listing of pre-revenue biotech companies, as well as they open up to listing of weighted voting right companies since 2018. So for Hong Kong Stock Exchange, I believe that SPAC is just one of its many measures to keep the Hong Kong Stock Exchange attractive and open up more and more methods for listing. So I believe that there's no something special in it. But on the other hand, what we could see is before Hong Kong introduced a SPAC regime, there have been quite a number of the senior investment bankers, whether it's from Hong Kong or from mainland China, went to US, set up SPAC, and then participated in the investment of SPAC. And together with this is the target companies. They also look for the target companies from mainland China, from Hong Kong as well. So I believe this is a strategic move by Hong Kong in order to keep, for example, like the capital, as well as the talents, as well as good quality company in Hong Kong instead of going to other markets. So I think it all go back to the competitiveness. I think the third thing would be, as you know, I think since few years ago, especially I think it's more common since the last year, there have been reducing number of mainland China companies going to US because they fear someday if they get listed, they may be asked to get delisted, and then they need to find out a way to come back to Hong Kong or even China. So I think it is the best time for Hong Kong to introduce a SPAC regime to handle and to tackle this kind of the players. Thank you.
Thank you, Daniel. Adil, anything to add?
Sorry, can you hear me? I was just, my computer got stuck.
Yes, we can hear you very well.
Yeah, perfect. No, I think that, first of all, I think to Daniel's point that I believe this has a lot to do with that Hong Kong making a push for the local companies in that region to be encouraged to be listed in Hong Kong instead of exploring opportunities in other jurisdictions. So I think it's interesting. I was talking to a few investors in Japan, and they were actually very concerned that why are we not why is there are no Japanese companies doing a lot of SPAC merger? So I think that kind of shows you the problem that a lot of these companies are very interested in coming on and listing on NASDAQ or New York Stock Exchange, and SPAC has opened that door for those companies. But I think that also taking away a lot of businesses from the exchanges like Hong Kong Stock Exchange. So I think that which is, I believe, is the primary reason. And then secondly, I think that there are so many startups in Asia, and naturally SPAC has opened the door for those startups to raise capital in their local jurisdictions as opposed to exploring that in US. So I think it also present like a competitive nature too. So I think Hong Kong wants to be a competitive force because it's a very established financial system, and I believe that SPAC can really fill the void there that's been created due to the jurisdiction environment that prevent those companies to be listed there. They're always exploring opportunities in London or UK or the US. So I think SPAC is really providing them a true alternative for those companies to actually stay local, because of course it's easier for them to be listed in Hong Kong because they understand the regulations and they can be much more successful, and investors can truly understand their business model as opposed to being listed overseas in London or the US.
Thank you, Adil. And so a related question. So one of the attendees, Yi Zhang, has asked, so if there is any prospect of SPACs in mainland China, so will the Chinese authority ever allow this regime to take place in mainland's capital market? So any thoughts on this, Daniel or Adil? So given this local aspects that Adil just emphasized.
Thank you. I think for the moment, not yet. I believe not yet. There's still a long way to go. And I think the second point would be, I think the mainland China is happy to see Hong Kong to kickstart this regime first, and see how it goes.
I would add here that I think I agree with that point of view. I think it will take time because obviously, from what I know and from what I've heard, it's not really easy it's not really easy navigating all the, political system in China. Of course, it has its own reasons and the approach. So I think it'll take time. I think, but it will eventually catch up, right? Like like how Hong Kong is pushing for it, and I've seen some news in like UAE and London, Amsterdam. So I think eventually it will come there because remember, the Chinese economy is huge, right? It's a huge economy. There's so many companies even in that local region, and I think that China can play a critical role, but probably not now. But I would say definitely down the road.
Thank you. So with this, I would like to move to the topic of the comparison between New York and Hong Kong markets, and I would like to start it by giving kind of an overview of very recent developments in specifically New York, because Hong Kong is just starting out. So, like personally, I see kind of three developments recently. So one is so the enthusiasm for SPACs has cooled a little bit this year, which is in a way not surprising given that 2021 was such an enormous boom of this. So it's natural that there will be like a little bit cooling down. So second, it seems that the redemptions by SPAC shareholders of shares have increased. So it seems like the shareholders started paying more attention to their decision whether to redeem shares or not. And also, I have seen some kind of emergence of some alternatives to traditional PIPE financing. So with now like use of convertible debt or something like that to raise additional capital. And finally, just a couple of days ago, some new disclosure requirements by SPACs that were proposed by the Securities and Exchange Commission of the US. So depending on how this moves, this could be potentially pretty important. So specifically, so there are rules regarding tightening of legal liability and getting rid of that safe harbor for forward-looking statements, in a way like making SPACs kind of closer to the traditional IPO process. So that's what I've seen being kind of on recent developments. So like moving to the comparison between New York and Hong Kong, I would like to hear your thoughts, Daniel and Adil, about kind of what you see as the difference in terms of development, executions, and functions of, like in the Hong Kong, I guess, like more potential of this SPAC market. And Daniel already mentioned that in Hong Kong, trading of SPAC shares is kind of limited to professional investors. In the US, everyone is welcome to do it. So aside from this, any other differences you see?
Yeah, thank you, Andrew. Yeah, you mentioned the stock trading arrangement is only open to professional investors. I think there are also two other key differences. One is I think Hong Kong has imposed quite high requirements in order to become a SPAC sponsor. Of course, in Hong Kong, we call it a promoter. At the moment, it needs certain licensing requirement. It has to be either license number 6 or 9, which is either asset management experience or corporate finance experience, those kind of things, in order to become a sponsor. And then as well as the other key difference would be the strict investigation or strict due diligence and vetting for the de-SPAC target. I understand that US SPAC regime is far easier for the de-SPAC transaction to be completed, but in Hong Kong, the Hong Kong Stock Exchange has set out the rule that they will treat the de-SPAC target to be acquired by a SPAC as the same as the company going for traditional IPO. So I think this is a very crucial difference, because what it means is actually in Hong Kong, the time spent on setting up SPAC as well as the de-SPAC transaction and the procedure is actually longer and more complicated than traditional IPO.
And just to add what Daniel said, I think also in Hong Kong, like, you know, the SPAC sponsor team, the promoters, they need to qualify and have certain kind of experience in the past to be listed in the filing, which frankly speaking, I've not seen in the US, right? Although I don't know if there's a set rule in the US, but generally speaking, since the markets are more established here, right? Like I was listed in the S1 filing, and there were a few other folks, and I didn't have that experience in 2019. But of course now I do, but at that time I didn't. But I think in Hong Kong, you need to fulfill certain amount of criteria to be a SPAC promoter. So I think in Hong Kong, like I definitely sense that regulators are being overly cautious because you know, they saw that a lot, the kind of I wouldn't call the market blew up here, but they saw that, you know, a lot of bad players got out. And of course, like market can digest those bad players because the market is just so big in the US. In Hong Kong, of course, the market is not that big. So even one or two bad players can really impact the market. So I think those regulations in Hong Kong, in a nutshell, I would say are far more stricter than as opposed to the US.
Thank you, Adil. And to follow up on this, and this is related to a question that Derek Liu asked. So is it fair to say that in the US, there are pretty much no requirements on regulation in terms of who could become a sponsor of the SPAC, and as long as you know you could raise this capital through an IPO and convince some people to buy your IPO shares, anyone can become a sponsor? Or are there any restrictions?
I think the answer here is, in a nutshell, is a yes, but I would do say that you know, your underwriters, your lawyers, they do a heavy background check on you, right? You fill out all the FINRA questionnaire and DNO. DNO is basically directors and officer questionnaires and stuff like that, right? Because you need to have that. So when you fill out those questions, you know, they do a background check on you. First of all, I know that sounds crazy, that wow, anybody can be, but you also need to know that these investment banks and lawyers are very sophisticated people. And you know, they won't take you out if you have any issues or red flags, you know, or if you're not well known. And of course, even if you pass through that process, and you know, you check all the marks, then you know, at the end of the day, it'll come down to raising the capital. Like in my case, give you one example. In, you know, one of my SPAC, Glazer Capital, it's a very large hedge fund. They buy my IPO and a lot of my SPACs at 10%, right? Obviously, I have a relationship with them, right? So that's different. So that kind of makes the job easier. So I think, although there are no strict regulations, but I think during the process, throughout, you have so many checkpoints that you have to go through that basically kind of do all the background check on you before you're able to list. Otherwise, there won't be, you can't raise a SPAC.
Yeah. I add one more point for that. I agree totally with Adil. In Hong Kong SPAC regime, it could be one promoter or several promoter, but the requirement is that if you have more than one promoter, then all you need to have is just one promoter to have the experience of the asset management or corporate finance. So the others, there's no need for the others to have. But then in a commercial world, you are asking various professional investors to invest up to an amount of 1 billion Hong Kong dollars into a share, which has no business at all. So what the professional investor will look at is not just the promoter which has the experience, but also they will also look at other promoters, even though they do not have experience, but who are they? What are their background? Are they experienced in this kind of thing? So eventually, in a commercial world, you need to take care about the sentiment of the professional investor in order to get the 1 billion investment and make the SPAC listing successful. So basically, the rule is you only need one to have the experience, but then the market force will make you think about it.
Thank you.
Thank you.
So it's interesting that I guess like we can see celebrity SPACs in Hong Kong as well, as long as they team up with some professional promoters. So one of the attendees is asking about the investment bank selection process, so specifically whether SPACs choose the same investment bank at the IPO stage and at the transaction stage, or whether different banks, and if different, why? So maybe Adil, you could speak from your experience.
Yeah, the answer is like you can do either way, right? To give you one example, and again, this is just my experience, and please don't hold me against it. But like, I like to use Cantor at times, right? They're very fast, amazing bank. Only when you're raising the IPO. After you've raised the IPO, your SPAC is closed, you're on your own. You have to close the deals. Cantor that's just how the Cantor business model is, right? In that scenario, I have to use another bank. So I've been using Moelis, for instance. Moelis or Jefferies, they're good, right? The other set of banks like JP Morgan, Citi, and Jefferies, or Moelis actually, if they underwrite your SPAC, meaning they help you through the entire IPO process, they will most likely also be on your de-SPAC side. So you also need to know is that a lot of these investment banks have their fees tied to a successful de-SPAC of a SPAC, right? So they have a lot of money tied in the back end. Even though in my previous example, Cantor may not play a key role in the de-SPAC, but they still have a lot of money tied up. Their fees are tied up so that when the deal closes, they will get paid. But to answer your question, there is no set rule. You can go either or, right? Sometimes Goldman can show you a deal. I think they do a terrible job, right? From my experience. So because they were super busy, so like in that particular scenario, I will have to use another investment bank because I'm running out of time. And if I have a deal in hand, I want that deal to get closed ASAP. So.
Thank you, Adil.
Yeah.
And in Hong Kong,
in Hong Kong, we could use the same investment bank for SPAC listing as well as the de-SPAC transaction, and you also could use a different one. Yeah, so it's pretty flexible.
Thank you. And so one of the attendees, Juanita Lee, is asking kind of an interesting question, also in the context of the comparison between Hong Kong and in New York. So in terms of what kind of institutional investors are interested in SPACs, I presume actually means this in the context of equity investments at the IPO stage. Do you see kind of any interesting new trends or developments? And is it different in New York versus Hong Kong? So Adil, maybe you could start.
Sure. So yeah, I can talk about New York, in US. I would say that traditionally, SPACs, SPAC investors are pretty much hedge funds, arbitrage players, and that has caused a lot of problems, right? Because these hedge funds are just arbitrage player. They are trying to get in and get out, right? And a lot of times you've seen a lot of redemptions, right? When the deal vote comes, they're like, you have seen so much redemption. So just to clarify that, once you've shown the deal, if you don't like the deal, you can take your money. So you've seen redemptions up to like 90%, in some cases 95%, right? But that poses a problem that these hedge funds are basically screwing a lot of the SPAC promoters too, which is not good. But now we're seeing a little bit of shift, right? So people are bringing in their own institutional investors. Some of these SPACs are institutionally backed. So these institutions are, promoting the SPAC. They're also coming into the IPO and they're coming into the pipe. So you're seeing that shift now where good players, long-term institutional investors are investing in SPACs, which is making market a bit better from my perspective.
Thank you, Adil. And Daniel, anything to add? And also, is it different in Hong Kong?
I think Hong Kong, because for initial SPAC listing, it only opens up to investment by professional investors. So in fact, Hong Kong do not have many professional investors. So this is why now the trend in Hong Kong for Hong Kong SPAC is very hot. Everyone who is interested in doing SPAC, they want to do it as soon as possible, because as soon as they get the investment from any professional investor, that money will need to be kept in a trust account for probably up to 2 to 3 years. So the money will gradually use up as more SPACs will get listed in Hong Kong. So now SPAC in Hong Kong is like a new kids on the block. It's like a new toy. Everyone wants to do it and then do it fast. And then everyone hopes to become the first batch of the SPAC successful get listed in Hong Kong.
Thank you. So we have one of the attendees asking it's a very big and interesting, but a little provocative questions, I would argue. But I would love to hear your thoughts. So basically, in the context of recent stock market reactions, like many SPAC stocks did not perform very well. Some kind of tanked pretty significantly. In the tightening of SEC regulations, what do you see the future of the SPAC IPO market is going to be? So basically, do you see this as like a long run viable alternative to the traditional book building process that maybe will be much bigger than the traditional IPO book building process, or will this be like more a temporary boom and it will be a small part of the market?
That's a very fair question. I mean, I think about this question all the time as well. So I think that to my earlier point that I said, I think that a lot of players that were doing a SPAC they shouldn't have, right? And a lot of these banks took them out, which I strongly disagree with. And the other thing is that a lot of these companies went at a very high valuation when the equity markets were booming, because essentially when you're taking company public, although you do all the analysis, but if you're a finance student, you will know you will do a publicly traded company, public comps analysis too. So the equities are trading so high. So these SPACs are, although they were getting at a discount, they were taking this target company public at a discounted value. But in reality, the valuations were off the roof. These companies with a 1 billion valuation, were going out with 2.5 or 3 billion valuation. What do you expect, right? All these hedge funds started to redeem their shares, get out of it, and the stock started to tank, right? So I think this is just a normal reaction. And secondly, it has to do with the broader market too. Although this is a fair criticism, but you also need to know that a lot of these companies are very high growth oriented companies, very young. So you need to be very patient with these young companies. That's the whole thing about SPAC too. You have to give it 4 to 5 years to actually perform, at least 3 years. But 3 years is a good benchmark to basically judge these companies, because trading can be very short term, right? In short term, you're trading at $2, $3, but after look at Virgin Galactic, look at DraftKings. I mean, yeah, also remember, there are always going to be more losers than winners. That's just how the business model of SPAC is. You need to identify who the winners are. To answer your second part of your question, that I don't think it's a boom, right? Yeah, you won't see the craziness that happened in 2021. And I hope not actually that happens, because that just pollutes the market. I think SPACs are definitely here to stay. They will be an available alternative for these companies. I think as you see few years down the road, you will see the SPAC market getting more mature, more well accepted. There will be more structures around SPAC, and there will be more regulations around it, which in my knowledge will somewhat make the SPACs a better vehicle to use, right? So I think that we will need to give it some time. They are going to stay. They're not going to go away because you've clearly seen a lot of money being poured into these startups, and a lot of these startups will change our world eventually, because they're like these companies are actually very good, but you need to be patient with them. And with SPACs too, like there are issues that went out. I won't see them again. I don't think they'll ever get out again. So you will see more quality over quantity in the next few years in SPACs.
Thank you, Adil. This makes perfect sense. As if people learn more and more about what's going on, the market will mature, and there will be more quality. And Daniel, any thoughts on that? And also maybe with
in Hong Kong is different from US, because in Hong Kong the procedure and the due diligence and the approval needed for SPAC is the same, if not more complicated than the traditional IPO. So this is why I think that SPAC listing will never going to replace traditional IPO. I think both regime, one is SPAC and the other one is traditional IPO, will go hand in hand. And sometimes it depends on how hard the promoters or the sponsors to push for the de-SPAC transaction. Because as we know, the traditional IPO, you only have the shareholders of the listing applicant to drive the seat. But in contrast, for SPAC, you have, theoretically, you have a more experienced investment bankers or those who have experience in asset management, corporate finance to drive the seat. And in a sense that it might possibly create a synergy between the SPAC and these sponsor promoters, as well as the shareholders of the target, to build up an even bigger business, because now they have so-called guru or some guy to lead the target business. So, but of course, this is on theory, but at the moment, we can't see the SPAC will anyway replace the traditional IPO, because basically they are the same. Especially, I think the second point would be in Hong Kong at the moment, Hong Kong does not allow a startup company without any revenue or profit to get listed on Hong Kong Stock Exchange, except for biotech. So I think this is another limitation that limits the development of SPAC in Hong Kong. That's answer your first question. I think the second question, I think is the same, because now the SPAC regime in Hong Kong is a new thing. So everyone is very keen to do it. But I think maybe another 6 months or even 1 year, the market will become saturated and become more mature. And then when we see more SPAC get listed, and probably when we see first SPAC fail to get the target, then we will see that the trend will die down for the SPAC. Thank you.
Thank you. So related question, like I would like to ask your thoughts about the regulation. So specifically, in your view, what should be optimal? And by optimal, I mean kind of broadly from the perspective of all participants in this. What should the optimal regulatory regime be? So should it be kind of closer to Hong Kong current SPAC regulations, which limit this to professional investors, kind of, and a lot of due diligence, or should it be like closer to the US, where it's more like the Wild West? So Daniel, what are your thoughts on this? And then we will move to Adil.
Sure. I think the Hong Kong capital market, US capital market is definitely our guru, our pioneer, and our guide. Not just SPAC. Actually, we also make quite a lot of reference to US when the Hong Kong Stock Exchange do they open up the listing of pre-revenue biotech companies. So whatever that is good in US and that is more advanced, we like to follow, and we like to copy and then adapt to suit our needs. So I think the only thing that we can't copy is probably the Hong Kong Stock Exchange is more prudent in handling the SPAC regime. I think maybe sooner or later it will gradually open up like US in terms of SPAC, but we don't know yet.
Thank you. And Adil, your perspective?
Sure. I would say that in US definitely it's to a certain degree it can be a Wild West. I agree. But I also think that there are certain things that work in the US which I believe that may not be very applicable in the Hong Kong environment, because I'm not an investor there, but I can tell you that, as I said, there are some companies or investors, when they make their investment, there's a certain procedure that they follow that works for that particular jurisdiction. So I think although I would, US market is the pioneer of that, and we really have like a bad past in terms of SPACs. They were not used for a good purpose in the past, right? So there's definitely a black mark there. So I think the interesting thing is that we need to understand is I think Hong Kong is in a position where they can take the best from the US, and then they can also apply the things that they think are appropriate and are missing from the US system in terms of SPACs, and can make it even a better product, right? That works really well for the entire Asian market. Because from what I've seen is that there are very few Asian companies that went public via SPAC. And believe me or not, US, it's it's a country of 300 million or probably more people, right? But there are many companies, but there's a cap. But then you start talking about Asia, right? There are so many companies. I know I'm working in India. There are way too many companies there, right? Good targets. Now the problem becomes that somebody need to take advantage of that market, right? So I think what I'm saying here is that Hong Kong is in a position where they will continue to I think evolve. I know some of the rules I was reading through, I was like, they're pretty crazy, right? But I also think that these are those rules are there to protect investors, and I do believe that over time I think these rules may become less stringent, but I think they're starting on a very very tough rules. So there are few players, more quality, and investors are protected, and I personally believe that is the good approach, for a product such as SPAC, which is not very simple to understand,
right? Thank you, Adil. And we have one of the participants who asks Daniel specifically, so could you share a bit about your insights on how Hong Kong Stock Exchange may allow pre-revenue TMT companies to list in it? How to address the potential value gap of TMT companies in APAC and in the US market? Sure.
I would like to present good news for this audience. At the moment, up to now, up to today, up to this second, Hong Kong Stock Exchange only allow pre-revenue biotech company to list in Hong Kong, but not other businesses. But it has been confirmed that the Hong Kong Stock Exchange is now looking into allowing pre-revenue innovative companies or the new economy company to get listed in Hong Kong. So I think it will be pretty soon, probably the mid or the end of this year, the rules will come out, and then it will open up another way for this TMT company to get listed in Hong Kong.
Thank you. So moving to I guess we already started thinking about the future of SPACs, but kind of following up on this topic, I would like to think about this kind of transactions from the perspective of different players. So specifically, first from the perspective of companies trying to raise capital to grow, And then from the perspective of pipe investors, we had questions about pipe investors. So first, let's think about the perspective of a company trying to raise capital and thinking about a merger with a SPAC as one potential option among several. So if you want to kind of give advice to this company, what factors should it think about, and specifically, what are the risks that it should be aware of when contemplating raising capital via a merger with a SPAC? Adil?
Sure. I think in some of the previous questions, as I highlighted, I think it's very important for these companies to first sit back and really think through that, where they stand, right? Are they going to be a good company? Are they going to be a good public company, right? Public investors are far less forgiving as opposed to a private investor, right? And they have a very short term horizon, because right now, if you see, you will see a lot of retail investing, and retail investing just got more fuel during the pandemic times, and you will continue to see that, right? So I think these are really short-term holders, right? So if your company is not hitting the targets, I think you will be really penalized for that, right? So you need to really plan out that, okay, if we are a public company, can we achieve these goals? Can we hit the EPS targets, right? Can we actually grow? I think that can really help you decide that, if you will be a good player in the public market. The problem is, like a lot of these companies, as I said, that I came across, and I think a lot of people share the same point of view, they were not good. They were not public ready. They were good companies, but they were not public ready. And I think we saw that. And when they became public, their stock price just crashed. A lot of investors lost their money. And that's why there's a lot of scrutiny around it. However, a lot of the smart companies you saw, they terminated their plan to go public via SPAC because they saw what happened. With the companies that went public, they were not ready. Their stock just tanked. So those companies were smart enough to terminate their mergers and walk away because they realized that they may not be a good public market company. Secondly, I think that you also need to think is that a lot of these companies are actually good private market companies, right? You can get more liquidity and you can get a better valuation, actually. I know that's crazy, but you can get actually a better valuation by staying public, more flexibility, and then you can also complete the fundraising process very quickly. So I think a company should not open themselves to unnecessary scrutiny that is not necessary for their business model. And I think a business should really think through their entire purpose of being public. Number one, is it just public because they want to be public, or they just want to go public because they believe the time is right? They can grow, they can raise capital, additional capital in the public markets after going public. I think these are all the set of questions that companies should ask themselves before going crazy and doing like a SPAC merger just because every other company is doing that. Thanks.
Thank you. This is very insightful. So basically, ask yourself, are you ready for an adult world, right? Are you ready to become a publicly traded part? And if the answer is no, then raise private equity. And to kind of a bit follow up on this, in what circumstances would you recommend for a company to do a traditional book building IPO process instead of, so basically, we think for you, merging with a SPAC is not a good option. You'd rather do traditional. So what would be a company, like, in what circumstance would you think that would be a good recommendation?
I would say a company that is a mature company that is very close to being like cash flow positive. I think that sort of companies are a really good public market companies and should explore a traditional IPO route, right? Because their story's clean, plain vanilla, the investors will understand, and they also already have few investors in their book, right? I would also like to take this opportunity and also answer like which company, like in terms of like why wouldn't they, like that company wouldn't want to do a SPAC, right? So I think a SPAC target company can be a good company which needs to raise capital, and they believe they can raise capital quickly through public markets via SPAC, and their story is a little more complicated. And when I say complicated, maybe that company is seeing a lot of growth in the future years, right? Which a traditional IPO process wouldn't allow you to talk about your future earnings or cash flow. Now, if a company, right now, as of today, they're not that mature, but they believe if they get the right amount of funding through SPAC, they can expand rapidly. So I think the SPAC will make more sense for them. And the vice versa, if a company is mature, they're already getting close to cash flow break even, I think the traditional IPO may be the good route for them. But on the other hand, you can do a cost comparison too. Sometimes even for those companies, SPACs may be a good idea because IPO can be extremely expensive. And I've seen in a lot of cases, a SPAC can be a cheaper way too. I know it's crazy, not all the time, but oftentimes I've seen a SPAC can be a cheaper alternative for these companies in terms of cost savings.
Thank you. And Daniel, do you think kind of similar trade-offs also work in Asia, or are there any possible differences, either because of different industry structure or because of different regulatory regime or something else?
Yeah, in Hong Kong, I think Hong Kong Stock Exchange make a very interesting point about how to help company to choose whether to go for a traditional IPO or SPAC merger. It says that, Hong Kong Stock Exchange says that it allows a company, that means with the one potential target, it allows that company to go into these two regimes in parallel. That means it could do the listing application in the way of the traditional IPO. At the same time, it also could do the negotiation and discussion of being merged or acquired by a SPAC and see which one goes faster. So I think that is interesting. Because in Hong Kong, the peculiar feature of a Hong Kong SPAC is that because for SPAC target, it needs to go through the same, or if not more complicated procedure, and the vetting, the whole process is even more complicated. So I think the only difference, the only factor that matters to the company is whether they want to reduce the market risk. Market risk, what I mean is whether it has any difficulty to do the book building. For example, like traditional IPO, for example, like I assume that its application is very smooth from the start till the end, even they issue the prospectus, but then it has to overcome the hurdle of attracting the investors to buy its shares, the book building, whether the share underwriting is successful and all that. However, in contrast, for SPAC, the listed vehicle is already there. The money is already there. So all that the company needs to do is to negotiate optimum price to sell its target to the SPAC. So in terms of the market risk, I think it makes the difference between the two methods. Thank you.
Thank you. So now I would like to kind of turn our thinking from the point of view of the companies raising capital to investors, specifically PIPE investors. So we have a question from one of the attendees. Are there any risks or benefits different from SPACs and their traditional investment methods for PIPE investors? So basically, as a PIPE investors, how do you think about risks of investing, giving PIPE money to a SPAC versus kind of other investment options?
I think it's not. I wouldn't say it's any different from any other traditional investment. However, there are some key differences, right? When you're raising or investing money in a PIPE, the process is very fast. You move very quickly. You have very limited time. You have to make the decision quickly. Of course, you need to run through. So it's like I would call it, it's a mixture of both hedge fund and private equity sort of due diligence, right? because you need to have a speed of a hedge fund, but you need to have like the due diligence capabilities of private equity, right? So, the pipe, typically, as you know, the pipe comes in at $10 a share. However, we have seen some outliers, like in Lucid Motors, the pipe was raised at $15 because the demand was outrageous, right? The stock has been doing well. In often cases, I've seen pipe being raised at $9.20, which is at a discount. Because when the stocks started to trade down, a few of the mergers and SPACs, and pipe market literally shut down because the investors were like, we're coming in at $10, the shares are going down, what is going on, right? So they started really to look at, like, they started losing money. But also remember that you also need to be patient with these companies, right? Pipe investors do the same sort of analysis. They do traditional fundamental analysis. They try to see if the companies are at discount. Do they actually see value from this company? Do they see the stock trading up to like $15 or $20? It's the same analysis you will do. Now I've seen a big shift in there. If you're able to raise an independent pipe, what I mean by independent is that there are pipe investors. They were not into your SPAC IPO. They're not existing investors of the company. They have nothing to do with this deal. And if you're able to raise, capital from those sort of investors at $10, that's a win-win, because that's really validates your, valuation for the company, right? Because that investor is saying, "Oh, you did well," right? Secondly, in the pipe investment, you need to have very sophisticated, large institutional investors, because once they come in, a lot of other investors come in too, because they follow them. It's just like a common mentality, right? Although you should always do your independent due diligence. So in today's market, I'm seeing like a lot of pipe investors are existing shareholders of the company, shareholders of the SPACs, because, and I think it sort of makes sense. Why? Because, those pipe investors who are existing investors in the company or the SPAC, it came into the cap table of the company or the SPAC at a different value. For their risk-adjusted value, maybe like, somewhere around $7 or $8. Although they're coming in at $10 a share, they may have led a company round at maybe $6 a share in private markets, right? But that, if you do that risk adjustment, they are, they're covered, and that's not a bad thing. They're providing, and they're putting their money where their mouth is, right? So I think I'm seeing that trend a lot. So existing investors of the company and the SPAC are coming into the pipe. And then there's a third trend that I'm also seeing. Investors are raising pipe at a discount, right? When I say at a discount, although they are getting the $10 value, but they're coming in at like $9 or 20 cents, or even in some cases $8.50, because there's just like, not enough, the pipe market is closed, the market is tough. Then there's another player called like Palantir. They're doing a lot of SPACs, pipe investing, and they're actually one of the pipe investors in one of my deals too. So I think they also have like a commercial agreement with the company that I'm taking public. So I think you'll also see strategic investors, and that's a really good thing. You'll see like big players like Microsoft, Apple. Although I'm not saying Apple, I'm just using that as an example. So you will see a lot of these big players coming into the pipe because they actually have business dealing with that company. So they have some sort of commercial agreements in place. So it sort of makes sense for them to come into the pipe and help grow the company. So I think pipe has become a really, really interesting phenomena, like since SPACs. Before they were just pipe. Now the pipe has a lot of angles, all the angles that I just highlighted. And I'm seeing, that being played, across different SPACs in very different ways. So.
Thank you. It's interesting how it has become such a rich area, and not just like the standard typical like equity investment.
Yeah, it was very simple before. It was very simple, like pipe. Yeah, you go to the investor, you show them the wall cross them, show them the company, they like the pipe or they don't. But now it's like a very, the process has really evolved, and there are various different angles the pipe investors are playing. Even I'm surprised. I've never seen it. I'm like, wow, is this a pipe, or it's just like a private equity investing? What is going on? So it's different.
Thank you. And Daniel, anything to add to this?
Yeah, one interesting point about Hong Kong SPAC is, in terms of pipe investors, Hong Kong Stock Exchange also requires require all pipe investors to be professional investors. As such, this is another higher hurdle for Hong Kong SPAC compared to US.
Thank you. And like one question I would like to ask you and hear your thoughts about is, so in terms of the contractual structure, how SPAC deals are organized, so be it like how warrants are organized, or how like redemptions or voting, or the promote of the sponsor. Do you feel these things are more or less set in stone by now, or do you see any kind of potential changes over the next few years in how, like, specifically the contracts are structured, like between the sponsor and SPAC shareholders?
Daniel, you want to take a stab at it?
Please.
Sure. Are you referring to the documentation for the initial promoter and the professional investors?
I'm thinking, let's say the typical promote is 20%. Like, do you see that's changing, or let's say like how so maybe like rules concerning how redemptions are designed?
Yeah, probably I start by from the promoter perspective, that's a sponsor perspective. I think Hong Kong at the moment, those eligible experienced personnel, for example, like those who are in asset management or capital finance sector people, are very keen to set up SPAC because they knew that the amount they invest in terms of the promoter shares, promoter warrants, as well as the earn-out rights, could end up giving them a lot of return from their investment. I have been calculated some examples in US side. Correct me if I'm wrong. It could be up to 5,000 times of the initial investment promoter could get at the end of the day when it becomes minority shareholders in a successor company. So I think at the moment, Hong Kong promoters, sponsors are very keen to set up SPACs, as well as they get the maximum amount threshold available in terms of promoter shares, promoter warrant, as well as earn-out rights.
And I would add that just to elaborate and just carry on to what Daniel said, that I think you also need to think about that 20% number is like it's a really like a arbitrary number, right? Although it's set in stones, but it doesn't really work well how people think. In a lot of SPACs that I know like when the SPACs were running out of time, a SPAC gave up 75% of their sponsor share. They only held on to 25%. In one of the SPAC deals that I'm involved with, which should be announced soon, we gave up 50% of our promote. We had to. It was a quality company. We forfeited 50% of our shares. Actually, 25% of them is like, and is tied to a vesting schedule. In the other two SPACs I was involved with, they have a vesting schedule all the way up to $18. So I haven't even cashed out. So we're really giving them a lot of time to like grow those companies. So basically what I'm saying is that 20% number is really like, it's all, you can reduce it, you can make it big, and it's if you're a really, really good SPAC team, like in one of my SPAC, we were able to retain all our sponsor promote, but we brought a lot more to the table. So I think that number, yeah, I don't think that number will change, because that 20% number that people know, that not all the SPACs are able to hold on to that number. They know that we use that 20% number to shop around too. We have to pay for deal sourcing. We sometimes pay for transaction fees out of that 20% too, meaning like we will give like maybe 5% shares to underwriter for the underwriting fees. So, we can retain a lot of cash on the balance sheet for the company to grow instead of paying all the transaction fees, right? But I think I will really defend that 20% number, because we use that in very different ways. People think that we can hold on to it. No, that's not the case. That number is really important for us to find and get a really successful company, because that number gets like paid in very different ways. As far as like the, like the for redemption goes, my personal opinion is that it'll become more tough for public investors now, because the redemptions has caused a lot of problem. I'll give you an example. Think about it. A hedge fund comes into the IPO. They buy 10% of your IPO. Hypothetically speaking, out of 100 million, they buy 10 million, right? And if you're SPAC, typically a SPAC first time issuer have half a warrant. Like each share will come with half a warrant, right? Now, if they have 1 million shares, that means they also have 500,000 warrants, and warrants trade separately under a different ticker. It's pretty liquid. Now, the problem is when the redemption voting comes, the deal comes, they can say, oh, we don't like the deal, we would like to redeem our money. They still hold on to that warrant. How unfair is that? I think that's very unfair. That they came into the IPO, they redeem all their shares, but they still have a lot of the warrants left to themselves, right? So I think this is I feel like this is unfair for SPAC sponsors and promoters. So I will see some, I think there is some, there will be some tough rules around that. And I know the market is already talking about it, or like, they will tell them that, hey, if you want to stay in the deal, if you redeem maybe 50% of your shares and you leave 50%, you are maybe able to hold on to like all your warrants. But if you totally redeem all your shares, you don't like the deal at all, I don't think the market will accept and let them have all their warrants. So I think there may be changes coming down the road on that to prevent these crazy redemptions that we're seeing.
Thank you, Daniel. Thank you, Adil. And so the last question for our panel, I would like to ask before moving to a quick Q&A session, and this will be a question for Adil, given your experiences focused on insurance space and on fintech space. So could you elaborate about the differences of SPAC deals in these two industries? And also, what about the future of SPAC deals in these two industries, so in insurance and fintech?
So I think that the reason there was a huge boom in like fintech was because, as you see, the fintech ecosystem around us is rapidly changing. Look at the way we do banking today, right? Look at the way I do banking. I do my entire SPAC business on like online, manage my accounts and everything, right? So I think fintech has rapidly changed, and originally there was a SPAC boom and a lot of SPACs were focusing on fintech. So I think the fintech landscape is just due to just like the evolution of the landscape and the availability of really high quality companies just naturally caused a push for, like fintech focused SPAC, because I think, these companies needed capital and capital very quickly so they can put that capital to work, grow, and really change our world around us. So I think that was one of the key reasons that we saw a lot of big thing in fintech, right? So I think I'm continuing to see a lot of activity in the fintech space. One of the London SPAC that we're launching is really focused on it's focused on the fintech sector in Europe, right? So I think just I'm still seeing that trend. You will continue to see that trend. You will continue to see a lot of investments coming into the fintech companies as the world evolves around us. And pandemic just made that thesis much more conclusive, because during the pandemic, people realized that how important it is for these fintech and companies and their infrastructure to improve so they can sustain the work from home and the way that we do banking. The way we do handle our finances. So I think that has really shifted, right? So you will continue to see that shift. Moving on to insurance, I think insurance has traditionally been a very, very old school industry. You didn't see many players. There were very big traditional players, traditional auto insurance or home insurance. But I think that has really changed now. You will see a lot of digital marketplace for insurtech. So I think insurtech is more of a term that I will use. I think that there's a lot of opportunity out there. I think insurance insurance companies are coming up with extremely strategic ideas that much aligns with consumer interests and what they're looking for. So I think that has caused a rapid demand for investments in the insurtech space, like companies like Hippo or Lemonade, although they're not doing well. And insurance sector generally got hit bad during the pandemic, and it's still not, it's still trading pretty low. But I think in few years down the road, you will see a insurtech insurance 2.0, and you will see a lot of good companies come to the market, and you will continue to see that insurance and fintech space evolve over the next few years.
Thank you, Adil. So this was super interesting. So now I'd like to kind of finish our panel with a Q&A session. I apologize to the attendees in case we will not have time to ask all of your questions. So we would like to kind of finish on time, but we'll have a time maybe for a couple or maybe for three. So one question one of the attendees is asking, what are the laws and regulations of Hong Kong, mainland and Southeast Asia companies listed through SPAC? And what are the requirements? Where can I find the matters needing attention and relevant legal documents? So Daniel, maybe if you could.
Sure. I don't know the part where non-Hong Kong, but for Hong Kong alone, actually the rule is already introduced and implemented since the 1st of January this year. So it's all in the listing rules and is available from the Hong Kong Stock Exchange website. Thank you.
Thank you, Daniel. So then another question, this could be entertaining. Could you share an unsuccessful example of SPAC and what are the consequences to sponsors and investors? Adil, maybe anything comes to mind?
I mean, even for my SPACs, I wouldn't say like, I don't want to share any private news, but there were a few rumors. Yeah, we were looking at a few companies and, we were very close on taking them public, and last minute things happened and, things shifted and we had to walk away. But the consequences are pretty bad because when we are in bed with a particular company, you are in bed with them for a few months. Where you complete all your due diligence, you spend money, hiring all these advisors to do all the due diligence along with you. I think, and if that deal fails, we have to move on to another company, but we run through some of our budget. So remember, a SPAC has a really tight operating budget. A SPAC cannot have employees. We don't get salaries. Yeah, we have like minor travel expenses, due diligence related expenses. So I keep a very close eye on my SPAC's bank accounts because, we need to have a very strong conviction that, oh, this company will go through. If the deal falls apart, yeah, there are consequences, and we run through our budget, and then if we don't have enough money left in our bank account, how are we going to pay for our 10Q filings, 10K filings, and all the due diligence expenses associated with it? So yeah, we need to be very tactical in terms of the companies we look at. And a failed SPAC deal, when a SPAC gets liquidated, yeah, I mean, I wouldn't say that will necessarily tarnish your reputation, because you can argue that, hey, I couldn't find a good company. That's why we're liquidating our SPAC, although we did see some targets, but we didn't find them that will generate value for our investors. Actually, that's a good, I would respect them more because, yeah, like, you're not able to always win or find a good company. So it's a good thing, instead of merging with a company that was not worth it, instead of just like, just walking away, taking a break and telling them and returning the money back to your investors. However, if the failed SPAC deal can also be like, if a company goes through a SPAC merger and then company files for bankruptcy or whatever, right? That can really tarnish SPAC sponsors' team reputation, right? Like, I personally wouldn't want any failed SPAC deal associated with my name, because obviously, my investors will start to lose confidence in me. So I think in a nutshell, what I'm saying here is that when you're looking at the company and because you have a list of handful of companies, you really need to have a very strong conviction that this is a good company, and we will go through that. And I think you get that answer when you do all the due diligence. So due diligence is extremely important because that can really make or break your SPAC.
Thank you, Adil. This makes perfect sense. If I'm an investor, I'd rather the sponsor returns the money to me than does some very bad deal that
Exactly.
that fails miserably.
Exactly.
And maybe to finish, the last question from the Q&A is, so what's the biggest difference between S1 from SPAC and A1 from IPO? Because all A1 would have all kinds of description for the company, which SPAC doesn't have. So this question comes from Juanita Lee. Daniel or Adil?
Sure. Let me introduce the Hong Kong regime first. Now, in SPAC regime, actually is divided into two parts. One is the SPAC listing, which is very simple prospectus because it has no business at all. It is the second part which is the de-SPAC transaction that you will have the full description and the full contents, full disclosure of the target company. So that is the feature of a SPAC. On the other hand, in traditional IPO, when you submit the listing application, that draft prospectus need to have full disclosure, full contents of the listing applicant. So in terms of the difference between the two, in Hong Kong is no different because like what I said just now, because for Hong Kong, the de-SPAC target will need to go through the same, if not more complicated procedure and timing, due diligence, vetting by the regulators. Thank you.
Thank you, Daniel. So I think this wraps up our panel. So please join me with giving Daniel and Nadine our round of applause for their very insightful discussion and comments and answering our question. I think we all enjoyed it very much, and I believe at the peak we had 100 participants, so which is a success. So thank you very much.
Thank you.
Thank you.
Thank you everyone for joining and having us here. It was great talking about SPACs, and feel free to reach out to us if you have any other questions.
Thank you. And the Michigan China Forum organizers, if you have anything to add at the end. So I see there is a survey, so please everyone fill out the survey. And Natalie,
thank you all for this sharing all of this useful insights during this web panel. And just our audience, please scan this QR code to provide us your feedback on this back panel. And your feedback will just help us better improve the following events and also the panel. So just feel free to share your evaluations and some comments on this panel.
Okay. Thank you, everyone.
Thank you. Thank you, everyone.
Bye.
Bye. Bye.